So we're going to talk about implementing and executing your own strategy. Very, very important when we approach the markets. We understand what we're trying to achieve, and again, what our approach is. Your approach will be different to mine. I cannot lie to you. Today has been a very difficult day. A very difficult day in the markets. I'm used to big swings, markets going up and down, but when you kind of trade a large amount of volume as I do, it's very difficult to know what's right, what's wrong, and the markets are much much bigger than we are. I think it's got to understand that we can take pain on board, but we can't necessarily ride out all these peaks and troughs. So it's understanding when you're right, when you're wrong, getting out of stuff when you're wrong, getting your profit out when you're right, because these things can literally change in a few seconds. You can be very much on side, and then before you know it, you've made no money at all, even a loss. You can be very much offside. All of a sudden, you can have the opportunity to scratch. Then all of a sudden, you're offside again. So it's all about understanding, what you do to implement your strategy. What you look at. What is important to you. Because I can't teach you my strategy. That's the whole point about why I've been in trader for so long. I can't teach you what I do. I teach you how to learn to get involved with the markets in the right kind of way. Buy and sell where it's appropriate to your level of risk, to your level of your expectations. So before I start, as always, the risk warning. Remember that spread betting and CFD trading can have high risk or capital, results in losses that exceed your initial deposit. Not suitable for everyone, so please ensure you fully understand the risks involved. The information and comments provided here in those circumstances an offer or solicitation to invest. Nothing you introduce to investor advice. The information is believed to be accurate at the date produced. Education only. Content of the webinars, personal opinion of the moderator at nontrade.com. The content is not constitute financial investment or tax advice. Intraday.com is not set any liability for content comments made during this session. So building the strategy. Where does it all start? I guess you can read books, you go on the internet, there's a multitude of ways of finding out what is the right way to do something. If you're a golf player, you go to a golf pro, it will teach you how to swing the club, how to stand, what clubs to use. You want to play snooker, you want to play any professional sport, there's somebody there to tell you what to do. Trading's no different. There's a multitude of people out there that'll tell you what to do, and they'll charge you a handsome price. Okay, why do I not charge? Well, we don't charge because Intraday pay me a lot of money for you not to have to do that. I give the best financial education I can give, based upon teaching thousands of people to trade intraday, being a professional trader, risk manager, fund manager, managing the biggest trading floor in Europe, and they pay me a lot of money because I've done it for a long time. But I've not got guaranteed results because no one can do that. But I've got good results. So the reason I've been here so long is that anything I teach you is because it works. Now, you're always going to have to put some money in. You're going to have to lose some money. You're going to have to, take some pain. There's no easy way. There's no way of, circumnavigating the trading experience. It's going to be a painful experience for all of us. But the more you learn, the quicker you do that, the more profitable you are to InterTrader. Therefore, the more we want to keep you. I guess many people think they are smart. Most people. Okay, let's cut it right back to basic brass tacks. Majority of people that trade are men, and we all think we're right. That's generally the kind of male attitude. If we can do something or find out some way of doing something, we generally think we can find a better way of doing it. We can streamline it, make it better. Okay, you can't do that. Okay, so it doesn't matter what you think, you can't do that. I've tried it. Take my example. I've spent upwards of 3 million quid trying to prove I'm better than most people. I'm not. Okay, I write books, I do these presentations, I do 1,000 webinars. It took me a lot of money, to find out that I'm just a normal person. But there we go, it's kind of one of these things, it's the biggest thing in the world is, that we think we can reinvent everything we do, and we can't. When it comes to the markets, it's not about reinventing what we see, what we interpret, what we do. We have little money compared to what the big players do. $4-5 trillion is traded every day on the FX markets. Okay, I've got 700,000 quid in my account, 700 grand. I can't take on a hedge fund. I can't take on a bank. Okay, if I can't do that, you can't do that. Yeah, what have you got in your account? 10 grand, 20 grand, 50 grand, 100 grand. I'm still 7 times bigger than that. I've got a wealth more experience, and even I get bullied by the markets. So you got to understand what you know. what you can do. It's all about, being involved where you can. If you're a small, kind of non-league football team playing Chelsea, chances are you're going to lose. You might get that one opportunity, we get that, dream cup win, and, you win 1-0. The chances are you're going to lose. And that's where you're going to look at trading. You're generally going to lose. So you need to figure out what your strategy is, how you can get involved in the market, and how you can build upon that. Because you can make money being a retail trader, but unless you're absolutely rigid and you understand what your rules are, you will get bought out by the market every single time. Why? Well, because they know what you do, don't they? If I can teach you how to trade, they can understand how I teach you to trade and then manipulate that. The whole world's about edge, manipulation, these tiny, not even a percent, a quarter of a percent. There's that extra little bit that gives the edge. So if I tell you how to look at the market, how to kind of, use it in your favor, I'm only giving you half the story. The rest of it doesn't matter what I say. You've got to put the other half in. You've got to tell me how you understand the market, how you get involved, how you feel pain, how you feel, you can, make money from the market. Because I can't tell you that because I don't know you. I guess a lot of people fail in trading because they don't have realistic expectations. I've done many courses over the years. 5 years I've been, on InterTrader, and I've brought thousands of webinars. I've done hundreds of live trades, and I do things that most other traders don't do. Well, educators don't do. I trade my own money live in front of you. So it doesn't matter if you like what I say or not. If I'm trading live money and making money on the same account you are, all my money's to InterTrader. Okay, I'm not trading on some direct market access platform or some anything else. I'm trading on InterTrader. So if I can make money, you can make money. Sure, I've got more money than you have in the account, but with big money comes big responsibilities. I can't make £100 a day. I have to make £thousands a day. Otherwise, it isn't worth me having that money tied up in that account, is it? So I guess goal setting is important. That you have to understand what's relevant to you. If you want to make £100 a day, fine. You can make £100 a day with £2,000 in your account. That's fine. But you have to build it up, compound it, and keep going. With £2,000 in an account, you can lose £2,000 in a trade. Again, you have to make it relevant. I think the biggest thing that makes me laugh about traders and people that have no experience in trading. Trading's not investing. It's not about buying Apple shares and in 10 years' time they're hitting the highs, or buying the FTSE, selling the DAX, and it goes to highs or lows. The whole point is you're trying to make money at everything you do. So you need to have that mentality. If I buy something or sell something, I can make money. And the money aspect really confuses people. Making money is different. On my large account, sometimes I'm happy making 200 quid. Money's money. I don't care. If I make £200 in a minute, you tell me anybody else that earns £200 in a minute. I don't care. Okay? Money is money to me. £200, £300, £1,000, £10,000. It all comes with its risk. It all comes with its costs. And cost isn't necessarily money. It's time, it's investment, it's stress, all these different things. So making money is what it is. We can all make money, but it's how you do that. It's down to you, your own strategy. And you have to be very sure about what your strategy is and what you're trying to achieve. Because if you don't have a basic idea of what you're trying to achieve that's reasonable, you don't have a way of getting there, you'll never succeed as a trader. You just won't. If all you're going to do is try and be rich, all you keep doing is put money into the account, seeing it go away. I mean, having reasonable targets that fit in line with any kind of strategy. Your strategy can be just not to lose money in a day. That's how basic it can be. I'm not going to sit here telling you that I know the basic easy strategy. I don't. I've lost money. I've lost money in a multitude of different ways, and I've made money in a multitude of different ways. What I'm saying is, it's not about me. It's your journey. How do you make money? What do you do to make money? Sorry, excuse me. It's generally setting targets that are achievable to what you've got in your account. If you've got £500 in your account, you can make probably 5-10% of your account in a week. If you've got 10 grand, probably make 5-10% in a day. Okay, it's all completely scalable. If you try and make more money than your capital allows, you will generally always lose, because it only takes one miscalculation And let's face it, when you're starting to trade, you don't know, do you? You don't know what your pain thresholds are. And that's the whole point about trying to understand what you're trying to achieve from trading. Make it relevant. Give yourself a fighting chance. Trading is a marathon. It's not a sprint. Okay, and it's all relevant. You put £500 in an account because I can afford to lose it. You will lose that money. If you've got £5,000 in an account, very few people can say, "Oh, I put 5 grand in an account," and again, in their course, I can afford to lose it because people can afford to lose £500. Not many people can afford to lose £5,000. I'm sure there are plenty of people out there that could. Your John Terrys, your footballers, but they're idiots. We're trying to talk about people that are trying to make money from trading. If you give yourself some realistic expectations for what you've got on deposit, then you can get somewhere. I guess a strategy roadmap, and these are all the kind of it's like the idiot bingo, isn't it? Kind of without swearing. It's all like ding ding. I'd love to tell you an exact way of getting your strategy, your roadmap. It doesn't change really. I have to teach you the things that I've done a million times over and lost money. People I've told a million times over and they've lost money. Sometimes you're gonna have to lose before you learn yourself. I can sit here and tell you I've lost more money than any of you lot, more than you lot put together. But you don't believe me. You're gonna have to do it for yourself, unfortunately. And that's what trading is. So I tell you, figure out what you're trying to achieve. Monetary or tick targets. Okay, frequency of trading. People think that intraday trading means that you trade 100 times a day. Well, how can you be right 100 times out of 100? Very, very unlikely. Can you be right 60 times out of 100? Okay, getting there. Are you right once every other trade? 50%. You can still make money being wrong every other time if your risk strategy is the right kind of proportions. These are the things that people don't tell you. All they say is if you lose more than you win, you're going to lose money. It's not the case. And again, what are the elements of your strategy? Other factors, my 80-20 rule. I've written books. I've written software. I've literally, I've done it all. But the whole point is, if you haven't done these things, then how can you, with any confidence, say what you're going to do? If you don't understand my 80-20 rule, then, what? How can you expect to take on me as a trader? If I know more than you, I understand the markets work, how can you expect to take me on? I'm not the only, kind of call me whatever you want, money manager, hedge fund manager, whatever. I'm tiny. I've got much more money than most people, but I'm still tiny in comparison. So if I can get battered and beaten around in the markets, what are you going to do with your accounts? It's just simple mathematics, simple numbers. Then evaluation. Nobody likes to do any real analysis. People get bored by it, but if you don't learn from your mistakes, how do you move forward? I guess targets for me have always been a real problem because I love making money. It's really good. There's nothing better, to be honest. And then I hate losing money, but I'm much better at losing money and making money back than I am at making money and keeping hold of it. That's my personality. So guess think about how much you started with, how much you deposited. What's your leverage? What you're trying to make in one trade. What's your overall weekly, monthly, yearly target, and how often you're going to review these goals. If you have a 10 grand account and in 2 months you made 30 grand, your targets won't be the same. But all these things change, and we, as human beings, we're only really, really good at reviewing things when we've lost money. We're not very good at reviewing things when we've made money. So the whole point is figuring out where you are in that trading journey. Sometimes trading's easy. I've sat there in front of the screens and I've made money like it was gone out of fashion. Everything I did was right. And I think to myself, why is everybody doing this? At other times I spent not only days, weeks losing money. Every time I pressed a button, I've even got to the point where I did the opposite of what I thought because I thought I can't be any more wrong. Yeah, that's how the markets make you, completely doubt yourself. The whole point is the only thing you're in control of is when you press that button. Yeah, when you buy and when you sell. The markets are going to happen regardless. They don't care about you. They have no interest what you do. You're tiny, you're nothing, you're inconsequential on the market. Even if you've got £1 million in your account, which nobody here has, okay, you'd still be inconsequential. The market would still do whatever it wants. Remember, 4 trillion is traded every day in the FX markets. They don't care about you. So all you've got to do is understand what you control, which is yourself. When you buy, when you sell, when you get angry, when you're happy. That's all you control. So I guess targets are quite easy to ascertain. If you put £100 in an account, you put £1,000,000 in an account. Your chances of success are they differ. With more money comes more responsibility. But at the end of the day, if you can take a £5,000 swing on £1,000,000 account, that's much better than taking a £5,000 swing on a 20 grand account. I've traded loads of small accounts in my time. I've taken it to my limit, my margin call, and sometimes I've had to get out. Game over. Other times I've not, and I've made money. At the end of the day is really gauging, what you're risking versus what you're trying to make. I guess it takes money to make money, and it's quite easy to understand. Look at Intertrader. If you put nothing to £500, they give you no bonus. £500 to £1,000, they give you 50 quid. You put 50 grand in, okay? They think you're a serious player. You think you've got something to prove, or not something to prove, but you've got a realistic chance of making money long term. So they give you £5,000. So think about it. If you've got anywhere less than £5,000, Intertrader, okay, a money-making business. Remember, a neutral broker still only make money by you trading. They think that with between £2,000 and £5,000, you're not going to be around for too long. So they'll only give you 250 quid. But put 50 grand in, they believe in you. They'll give you £5,000. Now, I think it's good. Obviously, it's like any kind of business. You can't take it out, but they will back you 10% of your account if you put the money in. Because Intertrader know it takes money to make money. They've been around for a long time. They're a business. Targets. I guess think about anything. Everything moves and it's all recorded. Doesn't matter what chart you look at, the highs, the lows, whatever. Anything is recorded at all times. There's nothing I can look at that you can't look at. It's simple. You can be a hedge fund manager down Mayfair with £1 billion account. I've still got free access to the same information you have. So a high is a high, a low is a low. So you understand all the rules of the game. If the euro dollar goes up over the last 20 days between a certain high and low, you know that. I know that. Everybody knows that. This is the whole point. We all have access to the same information. However, it's the pain threshold, isn't it? If I know what you know, and I've got 10 times, 100 times, 1,000,000 times more money, maybe a high that you're selling at is not the same for me. Maybe I can push that your 1% or 2% of your risk above that and make some more money. So think about this. If we all know the same information, doesn't mean we're all equal. Again, think about these things. The last 20 days, we've got up 288.8 ticks as a bull market. So what do you do? Do you buy? Where'd you buy, though? Do you buy low, sell high? Well, that's what everyone tells you. But what's high? What's low? What's perceived value? That's the whole point when you're trading intraday or you're trading spread betting markets. I can make just as much money when you see these massive candles, going up 50, 100 ticks at a time. I can make just as much money as a long-term trader can with 1,000 lots doing 20 ticks as somebody trading £10 a point has to wait, 100 ticks. So again, think about what's relevant. I guess with targets, do you buy low? Do you sell high? We all forget this, don't we? Anybody who's ever talked to anybody in finance, that's the basic rule. But what's high? What's low? Where's value? This is the whole point, isn't it? Figuring out where value is to you is different than what's value to a hedge fund, what's value to a bank, what's value to a central bank, an institution. If I'm buying the FTSE low and I'm holding it for 10 years, not the same value, is it? Someone that buys it for 20 ticks on a Tuesday afternoon. All these things are relevant. So think again, what something can move, where you want to be involved in. I guess, thinking intraday and overnight is how you understand what kind of trader you are. If you're intraday, then everything that happens when the markets move is important to you. So hourly timeframes, moving averages, RSI, Bollinger Bands, these kind of things. If you're trading any more over, an intraday position overnight, then you're trading for a day, 5 days, 20 days, a year. That's a different type of mentality, and you've got to understand what that is. The whole point is, intraday is so difficult because you can be right and still lose money. You can be right buying the FTSE intraday and then still lose money. And by the time it opens in 2 days' time, it's going to 300 points, and you've still lost money. That's why people fall out of love with intraday trading, because it's very, very price sensitive, and it is frustrating. But if you want to be an investor, be an investor. You want to be a trader, be a trader. Figure out what you want. Okay, I can make more money with 1,000 lots in 2 minutes than somebody can, holding something with £5 a point for a day. Again, it's all relevant and relative. I guess frequency of trading. I mean, a lot of people that trade for longer periods of time, they do one trade. They bet the euro's going to go up. They bet gold's going to go down. They like that. They buy something because they've got an idea where it's going to go. I don't care. As long as it goes up or down or moves, I can make money. I can buy something for 2 minutes, sell it for 5 minutes, and then I make my money. If you want something to go in a direction for a prolonged period of time, again, you have to be an overnight trader. You have to be somebody who's picking the highs and the lows. The frequency of trading is much less. If you want to be a scalper, picking, you can literally trade infinite number of times. If you want to be a high volume trader in and out of markets, on InterTrader you can trade over 1,000 markets. You can buy or sell anything. You can be in there for a second. Some of my best trades today have been around about 15 seconds. 15 seconds. And that's even on the spread betting platform. Okay? Not direct market access. 15 seconds and now. Done. Made my money. I'm out. 3 or 4 minutes, perfectly acceptable. 5 minutes, I'm struggling. 5 minutes is a long time for me. So again, think about the frequency of trading. You have to make smaller amounts of money more often if you're a small time, in and out type trader. If you're a longer term trader, you make 1 or 2 trades and hold them. I guess once you've answered the question, can you hold overnight positions, then you know where you are. If you can, you're a position trader. If you can't, you're a scalper. And don't get too hung up on these things. It's your rules. What does it matter? You're the trader. It's your money in the account. Nobody can tell you what to do. Don't let Steve Ruffley tell you that you can't hold a position for 4 hours and be a scalper. You can do whatever you want. It's your money, not my money. So again, think about this kind of frequency of trading idea. I can buy and sell, as like anybody else can. But if you think about it, this is an area of interest. Okay, the market's gap down, big time from this green candle here. We've got this area of interest here, and a big sell-off. I can make as much money in that one candle as you can trading that, or we can be the same. We can buy, sell, buy, sell, buy, sell. You don't have to hold something all the way down to make the big money. Okay, there's always money to be made. Yeah, there's a lot of market movement involved in this area of interest to this low point here. There's money for everybody. Again, I think about this 5-day period. Big up buying market, and all of a sudden we gap down. Long-term traders have already made that profit, but then you can make the same again just selling it, and you don't have to do much. You've got to sell it. Every day closes red apart from this one. So 4 out of 5 days you can sell the market and still make money. As long as you're selling high enough, you're always going to make money. And again, it doesn't have to be pretty, it doesn't have to be perfect. As long as you're selling in a market that's going down, you can make money. So again, think about it. You've got 1 target, 2 target, 3 target. And again, these are hourly candles now, so you can see the market go up, go down. So it might take you 3 days to get from the high to the low, but every time in between, value area, value area, value area. Something's going to happen in all these points. You have to figure out where they're going to be, though, in the future. Okay? A lot of the time, if you don't know anything after the right-hand side here, you don't know anything here. All you know is the market's gone down. So you don't know this is support, or this is, support resistance, or this is the low. So what you've got to figure out is where the market's been in the past, working on the future. That is how you win at trading. And again, you think about when you look at things in the smaller time frames. You see this big move up and this gap down. From the gap here to here, that's a big gap. But on the way down, you make 88 ticks. This one here, 16 ticks. Here, 98 ticks. If you're trading £5 a point, £10 a point, you're talking £1,000 for this move here. You're talking £300 for this. You're talking, a lot of money when the markets move very aggressively. Again, it's about being right at the right time. So I guess the elements of strategy are very important. I mean, the nuts and bolts are easy for me to say because I've done it for a long time, but it doesn't mean what I look at. It's what you should look at. Once we understand if we're holding overnight or not holding overnight positions, we can kind of get an idea of what's important. Oscillators, indicators, things that are average take longer periods of time. So the bigger the period of time, the longer the average we're looking at. Everything indicator-wise is an average. Everything. Because it goes off what's happened in the past. We don't know what's going to happen in the future. Nobody does. Not one single person on earth. Okay? But we know what's happened in the past, and we can use that to predict the future. So every indicator, every oscillator takes a period of time in the past to give us an idea of what may happen in the future. So you think about that, it's pretty obvious, isn't it? So I guess everything's got its benefit and its drawback. I guess always going with the trend. That's something we should always do. If the market's really going up, buy it. It's going down. How many times have I been asked over the last year, what's oil going to do? I said, you spotted a trend. You're too late. It's going to go down. So oil hit $40. Oh, should we buy it here, Steve? No. $30. Should we buy it here, Steve? $28. Should we buy it here, Steve? What do I know? I don't care. I don't care what oil gets to. I'm saying if you spotted a trend, if you don't go with it, you're already too late. So think about it. Go get into the trend at your peril. Go with the trend because that's what the majority of market participants are doing. Simple. So you can think about all the elements of your strategy. If you do everything like RSI, MACD, stochastics, Bollinger Bands, they're all based upon what's happened in the past. So what's happened in the past gathers this data. All these things, stochastics, volume, Ichimoku clouds, ATR, parabolic ZAR, they can only give you an idea of what will happen in the future. Yeah? It's your job to figure out if something's not made a new high, maybe it's going to make a new low, and how do you interpret that? Again, very difficult, but that's what technical analysis is there for. Remember, we all have access to the same technical analysis. But remember, for me, a lot of people forget that the markets move 80% of the time in a technical manner, 20% of the time in a fundamental. Markets move because people trade them. If I hear something on the news, I will trade it. If I hear there's been people trade them. If I hear something on the news, I will trade it. If I hear there's been a terrorist attack in Paris, I'll sell the CAC, I'll sell the DAX, I'll sell the euro. It'll understand things. Understand that markets move 80% of the time because charts are always there. Charts are always there for anybody to see. Doesn't matter if you're a hedge fund manager, your Mark Carney, your Mario Draghi, Janet Yellen. Charts are there. You cannot get away from them. New news is new news, but you don't hear that new news that often. So for me, markets are trading because people see charts and they trade. Otherwise, they don't make money. 20% of the time, new news comes and they make extra money. That's the way it is. So again, remember, building when data comes into the market, into your strategy, it's dead easy. All the economic calendars are there for you to see. Non-farm payroll, first Friday of every month, big piece of data. The FOMC minutes, again, they're all in any economic calendar. So understand when new news comes into the market and what it's going to do to your position. And again, review things. When you're starting to trade, what do you know? Honestly, you know very little. It's a learning curve. You don't learn anything on a demo account because why would you? Why would you learn anything on a demo account? It's just pretend money. So put real money into an account and then buy and sell where it means something, that costs you money. That's what it's all about. Okay, guys, that's the kind of first real point of the how to get a strategy. Again, it's like all my kind of courses, all my kind of introductions to trading. There's a lot of questions you've got to ask yourself. If you don't ask yourself questions about fundamental trading, technical trading, what you're trying to achieve, then there's not a great deal I can bring to the table. If you don't ask yourself difficult questions, I can't give you a guaranteed roadmap because it doesn't exist. All right, guys. Any thoughts, any questions, anything you'd like to ask about the course? Again, all these things are recorded, so you can always go back and review them. I guess with all these courses, a lot to take in, a lot to take in, a lot to take on board. I've done these things for 15 years, so to me it's second nature, but I had to learn like you guys did, and I've taught a lot of people. I've taught a lot of people in InterTrader, 5 years, literally hundreds and hundreds of people. So I know it works, but it might work in a different way for you, so that's the whole point. Well, listen, guys, you can always get me, on Twitter at Steve Ruffley, or you can always get me on email, sruffley@tradermaker.com. This is, again, email addresses I've had for a long time, so you can always get me. All right, guys, well, no questions. Can't see any coming up, but you can ask me again in private. All right, guys, well, listen,